Chinese stocks extended a blistering rally today after clocking their best weekly performance in nearly 16 years on Friday as Beijing rolled out further stimulus measures to the broad economy. Benchmark indexes on the Chinese mainland began today's trading on solid footing, with trading volume topping 1 trillion yuan only 35 minutes after the opening, breaking the record. By closing time, the Shanghai Composite had jumped 8%, the Shenzhen Component surged more than 10%, and the Chinext had risen 15%. Trading volume for the day reached 2.5 trillion yuan, exceeding levels we saw in the bull run a decade ago. Shares of property companies rose sharply in response to China's central bank late on Sunday, saying that it would tell banks to lower mortgage rates for existing home loans before October 31st. Adding to efforts to reverse the property downturn, Guangzhou City announced the same day the lifting of all restrictions on home purchases, while Shanghai and Shenzhen eased curbs on buying. Mainland-listed property stocks advanced 6.4%, with companies including Shenzhen SDG Service, Greenland Holdings leading the gains. Also outperforming were financial stocks including Tianfeng Securities and Sealand Securities, amid the more supportive measures released by the central government, intending to draw more long-term capitals into the equity markets. Now, consumer staple shares also advanced. Liquor makers including Jiugui Liquor, Anhui Gujin Distillery jumped, reaching 10% daily limit. For the month, the CSI 300 recorded a gain of more than 20%, its best performance since December 2014. The Shanghai Composite Index was similarly strong, ending September with a 18% increase, its most since April 2015.
The recent rally in Chinese stock market can be attributed to several key factors here. First, the strong policy support by the Chinese government. In the meantime, we do see that the global sentiment has been improving as well, especially after the Fed cut the interest rate by 50 basis points in the middle of September. So I think both domestic and global factors has been the driver to help the Chinese stock market in recent weeks. So overall speaking, the short-term rally looks very encouraging for Chinese investors, but the most important thing, or whether this kind of rally can be sustainable, will be dependent on the overall Chinese economic performance over the next few quarters. Of course, we think that this kind of policy will continue to be supportive over the next few quarters.